Hello, everybody. Joe Malone here, coming to you live on Dallas Trading Floor. It is a Friday, and a little bit overcast here in Dallas. We are experiencing that summer that winter kind of weather. Not the necessarily the greatest thing, but Bitcoin got hammered today, and we are in a confirm. We are not. We're out of confirmed trend into a market trend under pressure. So, without further ado, let's get into the slides and kind of see what is out there right now. Well, the growth stocks kind of got crushed today, and the Bitcoin is diving. And the question is, what's going on here? It seems like we're having a very, very volatile market. A market which just it gives and it gets. It's hard to make a penny today. Boy, I don't know. But here's what we got. We got a market trend under pressure, and that is definite. That is definite. The market trend is under pressure. So here's what you want to do when you're faced with this kind of situation. You want to be very, very careful about initiating new positions. Even if it looks good and everything looks good, you want to be a little bit more careful right now initiating new positions. Now, that said, there are two areas of the stock market that seem to be doing well. One is the financials, and the other is the energy areas. So, I've been trying to push into that a little bit. I did do a one buy today in a company, LPLA. It's a finance company. I'll show you that in a second. But let's get into it. This is Bitcoin, and this is the daily chart for Bitcoin. As you can see, it's down to 41,000 per dollar. This is interesting because this may be a situation where if Bitcoin can't hold 40,000, it may drop below this. This might be a buying opportunity for Bitcoin because it's a little bit different, but hold off on it right now. Let's see how it's going to trade. A lot of it is up to the Fed. There's just so much uncertainty in the market right now, but Bitcoin has pulled back, so growth stocks has pulled back. So a lot of people are saying, it doesn't look good. We're going to move into cash. That's why financials are doing well. And that's why some of the low PE stocks, especially in the oil sector, seem to be doing well. So kind of interesting thing. Just want to show you the major stock indexes here. Basically, the Dow was the only thing that was up. The S&P was down, the NASDAQ was down, and the Russell was down. So, the question is, why is the Dow up and everything else down? Well, if I had a good answer for that, I would immediately tell you. But here's a chart of the Dow. And the thing with the Dow is basically only 30 stocks, and they're the biggest stocks, and they tend to be, kind of low, slow movers, but they tend to have low PE ratios, and they tend to have very good earnings. So that may be an indicator of kind of what's happening. I think that many of the funds are, they're selling out of their growth stocks. They're taking their profits. They're taking some of those profits and they're reinvesting them probably in some, lower growth, but potentially slower movers. It's interesting because, that's sort of the Warren Buffett method. Not that I'm, not that I totally recommend that for everyone. I want to show you some option plays that I've put out there. Two are bear spreads, and one is a bull, one is a bear, and one is an Iron Condor. So I want to show you the Iron Condor first. And what the Iron Condor is it's kind of it's an interesting trade. It's both a call spread and a put spread. But here's where we are with this. We came into the issue, and it has pulled back. When this price was taken, Tesla was at 120. So let's see if it's changed after hours. I'm going to pull up the chart here to see kind of where it's at in terms of in terms of the chart. But this is Tesla right now. It did pull back. It did pull up a little bit after hours at 1026. We seem to be getting some support right at about 1020, 1025. So hopefully, if this thing gets some support there and moves a little bit higher, we should be good for the for this Iron Condor. Now, the interesting thing about the Iron Condor type of trade is that, as you can see, it sort of has a sweet spot, and we want to kind of be more into that sweet spot. But interesting trade, and if you're interested in looking at this trade, It is available. Just go to https://bit.ly, bit.ly/DTF0029. And if you're looking on TikTok, super easy to get this trade. All you have to do is go to my profile, click on the link, and you'll be able to see. I think there's a direct link to the Tesla trade there. But if you're watching on YouTube or LinkedIn, the best way is to go to bit.ly/DTF0029. I think it's going to be a very good trade. Now, here's a trade that we entered just a little bit of time ago, and I think this is doing well. This is a bear trade, and this one keeps doing better and better as, unfortunately, Viva goes down. So as VEV, this is Viva Systems, goes south, this one does better. I want to show you the chart here for Viva. Viva was down today, as you can see, kind of on that downward train. And the more this moves down, the better it's going to get for this particular trade that we have here. This is the spread trade. Also, you can take a look at this one just by going to bit.ly/DTF022, and this gives you the direct access to the slide deck. So it's kind of an interesting trade. By the way, all of these trades are available for people on the action that are members of our Discord community, and they come out first there, of course, to that. All right, well, let's take a look at sort of what I'm currently in long. Everything I'm in is down. Can you believe that? I'm down on Invitation Homes. I'm down on Cheniere. That's LNG. I'm down on Dell. I'm down on Tesla, down $40. Ouch. And I'm down on Oasis Petroleum. So, boy, I tell you what, the only one I did well, and it's actually not on this list, is LPLA. So let's take a look at that one real quick. Just kind of pulling that up, LPLA, and I did just buy this one right before we went on the air, so that's why that wasn't on the slide. But here it is, LPL Financial Holdings. This one's actually up after hours, believe it or not. This one it's 180. It's looking very good. I'm long this one, basically coming in today on this issue. It's right at the buy point on the weekly chart, as you can see. Some very nice numbers in terms of the financials. The sales have been going up very nicely, and the profits, and that's the key, have been really going up. Interesting company. It's a broker's advisory services, believe it or not. This one seems to be doing well. I did enter this today. LPL Financials, LPLA is the symbol on that one. So that's kind of interesting as well. We'll see how it does. Now, also, if you want to get our watch list, and this is also a great thing, that is also available, the 2022 January stock watch list. And you can sign up for that super easy, www.bit.ly/DTF0025. So that's where that one is. So I have a new little section for you today. This is the ETF strategy, kind of a cool thing. This is if you don't want to trade a lot and you want to get some very nice gains. And the way this works is very simple. Sort of has three conditions, and if you use those three conditions, you will do very well. So let me kind of show you sort of what I do. Now, I use this exact strategy for my cash, for my cash. So here's kind of how it works with the ETF strategy. If the market is in a confirmed uptrend, which it is not now, it's in an uptrend under pressure, you invest 100% in the broad-based ETF, so such as the Spider or the QQQ. If on the alternative, it's like it is now, uptrend under pressure, you're only 50% in that particular thing, like the QQQ or the Spider, 50% in cash. If we move to a market in correction, you go completely out, you sell it, and you just wait in cash, waiting for it to come back to a confirmed uptrend. And the two ETFs that I recommend using this on are the QQQ Trust, that's the one on here on the right, and then the Spider the SPY, that's one on the left. And if you use those, this is sort of a market timing. This is a market timing thing. So basically, if the market moves back to a confirmed uptrend, you go and buy 100% in one of the broad-based ETFs, such as the QQQ or the Spider, the SPY. If it falls like it is now to a uptrend under pressure, you go 50% in cash, 50% in the ETF. If it moves to a market correction, then you go to 100% in cash. Now, also when you're 100% invested, you want to put in a stop loss at 2.6% below where you bought the thing. So I'll probably do a video on this one, show you a little bit more in depth on this one. Very, very good strategy for funds that you're going to be needing in less than 270 days or about a year. I use this I have rental properties, and with these rental properties, I hold the cash to pay the taxes. But during the time I'm accumulating the taxes, I use this strategy. It's a very safe strategy, and it can yield as much as 20-25% a year if you do it right. So very nice little strategy, very easy to implement this one. So kind of just wanted to show you that. I'm probably going to be doing some more stuff on it, some more videos. Some more videos on that one. So thank you very much for. I'm just yammering on here, and I want to get to some of the questions as quick as I can. Thank you very, very much, and I hope everyone's doing well today. Kira has a question. Jim, thoughts on UNG and BA first. Now, BA, of course, is Boeing, and Boeing is one of the Dow component stocks. So let's take a look at Boeing here and see how it's doing. There has been, as of late, there has been strength finally in companies like Boeing. Now, I do have a reversal line here, and it does look like, and what I'm going to do here is I'm going to reactivate that reversal line, and I'm going to see, well, definitely we are starting to see some strength in Boeing. We're starting to see it move above that reversal line. Now, it's still not buyable in this condition because it's below that very critical 200-day moving average. You just don't want to buy anything below that 200-day line. It's not a good idea. So let's kind of look to see kind of where things are in the technical sense. We are still 4.41% below that 200-day line. That's black, solid black line here. We don't want to buy there. Now, interestingly enough, we are above all of the other major lines, the 50-day line, the 21-day exponential, and the 10-day line. Now, what does this mean? Well, what this means is this stock has been pulling back for a while, and it looks like it's starting now to make a move, reverse higher, but it's still not there. What needs to happen is we need to get above that 200-day line, and then we need to be above the 50, the 21, and the 10. So we can't really do anything here right now. This is a classic case of watch list. The checklist on Boeing right now is relatively weak. It's 56%. Just don't like to buy anything like this. What we want, the market right now is rewarding low PE stocks that have high relative strength. So there's not too much to choose from in that category. But this has a nice reversal, but the relative strength here is too low. The checklist is not good enough, and unfortunately, if we look at the pattern recognition, we are 12% below the last pivot, which was 212 days ago. So, right now with Boeing, the capital is still flowing out of this issue. So we don't want to be in it because remember, the whole idea here is trend trading, where we want to be with the trend. And right now, if we were to buy Boeing, we would be against the trend. And it's not really a good idea in a market like this that is choppy and very volatile. We want to be with the trend. And right now, if we were to do a position in Boeing, it wouldn't work. So probably that well. So I would avoid Boeing here right now. I would definitely avoid, at least for now. I think what you've got to do, at least for now, is avoid Boeing. But I think you got to avoid it just because of what I said. I just don't think it's in a good situation. So avoid Boeing for right now. I think that's probably your best best bet. Let's look at UNG to see if we got anything there. UNG, is it UNG? Yeah, that's right, UNG. So this is the United States Natural Gas Fund, which this is potentially a good one. We are coming into a lot of inflation in the market, obviously, and one of the things that's going to be affected is the price of natural gas, because natural gas is the main component of generating electricity. Even though there's a lot of solar, there's a lot of wind, and everything else, but the real heavy lifters when it comes to generating electricity is natural gas. And we're coming into the winter, so natural gas prices are typically higher in the winter. So this is a good choice. Now, remember, this is not a stock, obviously. This is an ETF. So let's take a look at the chart here. The last time it made its high was back in September of last year. That makes sense. That makes sense because it's very cyclical, and it looks as if, we may be starting to see a movement higher here. I still wouldn't buy this one because it's below that very critical 200-day line. So I want to see it come above that. So this one, unfortunately, I don't believe we can buy either. This is starting to turn. This is starting to make a turn, but we are still 6.33% below the 200-day line, and we are 11.71% below the 30-day line. So that's kind of significant. Now we are above the 21-day line and the 10-day line. That is good. That's starting to see that it's starting to turn. But the way this chart reads is that it is being disinvested until very recently, and now it's starting to turn up. So I think the best bet on this one, on United States Natural Gas Fund, UNG, is to wait until it moves. If it can move above 14 and hold it, that might be a place that it can work. But right now, I think that's probably not as good as we'd like to see it. So just one of those things. Let's take a look at people from TikTok. That's what I said last year. What should we buy? Okay, good question. Right now, there's not a whole lot to buy out there, unfortunately, in the market. But I want to kind of see if I can do some sleuthing here in areas that might work. I did buy one stock today, and that's LPLA, and I want to show you this one. And this is buyable, I do believe. It's a financial stock, and this is one that I did buy a full position in, and it did seem to be working right now. But again, I'm very tepid on this. I don't know what the situation is. The situation is going to be. This is at the top of a consolidation. Right now, this is one of the weakest of the base patterns, but it is a base pattern, so that is good. But right now, it has come above. It's just right at that buy point, that 176.96 buy point. It's 180 after hours. I think it's making a nice move. Let's kind of look to see on the technicals. It's above that 200-day line by 16%, 16.9%, above the 50-day line, which about 6% above the 50-day line. It's above the 21-day line, and it's above the 10-day line. So that means all the stars are aligned with this one, LPL Financial Holdings are aligned. So this is definitely a place where we can potentially enter the we could potentially enter the stock here, and I did today. I bought it right below this light. I don't know if I annotated the chart. Let me see if I did annotate that chart. I'm just going to see if I did. There we go. There's my buy. As you can see on this, there's my buy. I bought a full position today at 175.45. Currently, it's trading at 180. That's a gain of $5 a share. So that's looking fairly good. If it can move past that buy point, that 176.96 buy point, then it might work. And that's kind of something that you might want to look at. This is one that I've been buying. We'll see how it pounds out, because this is a weak market, not necessarily the greatest thing to do. Your take on BABA, saw some volume, and can we short? That's a good question. I've been looking for a short on BABA for a while, and I haven't really made the decision, pulled the trigger on it, because there's certain things that I am seeing that are giving me a little bit of concern. Let's go over here to the BABA chart and see what we can see. So right now, right now on BABA, the situation we have is we are well below that 200-day line. So the stock is being disinvested. That's definitely what we want to see for a short. It has rallied and failed. That's good. It's rallying again. Now the question is, I think we got to wait a little bit longer until it rallies up to the 40-day line, and then if it fails at the 40-day line, that might be a good thing. Let's look at the technicals. I'm sorry, at the 50-day line, it's 4.29% below the 50-day line. So my guess is, if it can rally to that 50-day line, I think it will fail and it will move down. When it fails, that's where you want to come into it. So I'm not ready right yet to pull the trigger. I want to wait to see if there's any more juice. This is the monthly chart, by the way. Let's look at the weekly. I want to see if there's any more juice in it. As you can see, I had a zone in here from before, but it's come up to that 50-day line. And if it fails at that 50-day line, that's where you want to short it. But right now, I think we want to hold off on shorting it until we get a failure at the 50-day line. So that's kind of my take on it. But I am watching it very closely, Samuel. I think it's a great that's a great thing that you've put in there about shorting at the level. So I do think it's short a bull, but I don't want to do it right now. I want to wait until it fails at that 40-day line. That's what I want to do. All right, thanks, Matt. Let's look at RGP and take a look at at RGP. All right, everybody. This is Resources Connection. And of course, you probably know about these guys. I actually worked for Resources Connection. I actually did a contract years ago for Resources Connection. This, I think, was originally part of Deloitte, and it was spun off, but it's sort of their temporary help company. It's sort of, Resources Connection, sort of their temporary help company. It's kind of like your Robert Half, but it's kind of from the big four. So they do a lot of corporate stuff. Nice bounce here today. Relative strength 94. There's a blue dot special. What this means when you're using MarketSmith is that there has been some unusual activity on this on this one today, and it definitely looks like it came up to the pivot, which is 1944, and it wasn't able to hold it, pulled back again, but it may be making a second attempt tomorrow. So this is actually, relatively speaking, this is actually looking pretty good. We had earnings that came out. They were very good. Let's go to the fundamentals here. The earnings were very good. The sales were up 31%, and the profits, and that's the key, were up 124% on Resources Connection. So they had some very good earnings. There was a little bit of overreaction. I think there was, this is a classic case of buying rumor, selling news. People bought here, they did well, and then now they're selling, taking profits. But that gives us kind of a level playing field, so we may be able to come into this issue. Now, if I did buy this one, what I would do is that I would buy a half position below that pivot, and then if it comes through the pivot, a quarter position, and then right as it's getting ready to exit above 5% above the pivot, another quarter position. That's sort of how you want to step into it. But I'm not so sure. I'm not so sure yet. I want to see some more strength, because this is a tough market to trade right now because it's so weak. Even the very best issues are having trouble getting through the pivots. Right now, it's 2% below a consolidation pattern, the pivot being at 1944. So very interesting there. Very, very interesting there. One thing I will point out, and this is a really good point, Matt, and thank you for bringing this to everyone's attention. This is a 100% checklist. Not very many of these out there. There's not very many stocks that have a 100% buying checklist. This definitely has a 100% buying checklist. So it's a green light to buy it. It's just the question of what is our strategy for moving into the stock for the best for the best entry point, because entries into your buys make a lot of difference. If you have good entries, it can be very advantageous. You can be in the right stock, and if you have a bad entry, it can be a money loser. So the right entry is key here. If you're looking to get into this, and this one wouldn't be a bad one. I'm going to write this down on my list. RGP. I'm going to write this down on my list, resources connection, because this one is buyable right now. So definitely buyable. I wouldn't buy it with a full position though, but it's definitely, it's definitely buyable and good stock. So I appreciate bringing that to the attention. So RGP is buyable now. So it truly is viable at these levels. So very, very good on that. All right. I think I may have I have lost my internet connection. Wow. I tell you, boy, it's one thing and another. What should we buy? Okay. All right. That's what you said last year. All right. Good. Okay. Wish is a steal. Okay. Let's go to Wish, because I want to kind of clear up something. In the stock market, in buying stocks, it's not necessary. You can make money with cheap stocks. You absolutely can, but your chances of making money with a cheap stock is very, very poor. I know that a lot of people view the stock market as they view, going to the dollar store. If it's on sale, you want to buy it. That's really not true in stocks. You want to buy stocks as they're going higher, because remember, you're not going to live in, or you're not going to eat a stock. You're going to resell it eventually. So you're looking for merchandise that you can sell to somebody at a higher price. I don't think this is the connection. I don't think this, unfortunately, is the case with CoreLogic. It's just digging a hole. And I don't know if you ever I don't know if you ever, that Beatles song, fixing a hole. Well, CoreLogic is fixing a hole. It's just not a good stock right now. It's going down. I don't think you want to be in it. And I'm not trying to berate anybody, but 21341, I don't think you want this stock, please. Try to find some better merchandise. This is not for you. By the way, another thing I just want to mention here, and this is, I'm not trying to berate anyone, but here's the thing, and this does work. This does work over time. If you are down more than 7% on a stock, you want to consider basically selling the position. And there's a lot of reasons for this. So if you're down more than 7%, please don't. The idea of hoping and wishing, and that's not a good stock. That's not a good stock strategy. So if you're down more than 7% on the stock, please consider selling it. Because it doesn't look like it's going to recover, and you're just digging a hole, and you don't want to dig a hole, because it's hard enough to make money in a good market. You don't want to dig a hole in a bad market. So not the best thing. Hans is looking for PayPal and Qualcomm. Let's look at PayPal first. Take a look. PayPal seems to be bottoming out, which is good. Now, obviously, PayPal is not like CoreLogic. It's a much better stock. It does look like we're getting a shelf. This is called a shelf. It does look like we're getting a shelf. So we're finally starting to bottom out, and it looks like we're bottoming out at about at about this 161 to 164 level. So this, I did have a bear trade on this one. I closed it, but I do think that this one could start to get firmer and move higher. Right now, I just think you got to watch it. I don't think it's viable right now. But let's kind of look at the technicals and see kind of what the situation is. Yeah, we are under all of the major index lines. We're under the 200. We're under the 50. We're under the 21, and we're under the 10-day line. So right now, not a great time to buy PayPal. So it's just on this one, and this is very painful. It has a poor checklist, only 44% checklist. right now with PayPal, and it is a good stock, and I think it will come back. So I'm not writing it off forever. But on this one, what you really just have to do on PayPal, and it's painful, is you just have to watch list this one for now. That's all really you can do with PayPal. It's just not in a position where it can be, where it can be bought. So right now you want to watch list PayPal. Don't buy it, but wait, it will turn higher, I believe. But right now we got to just watch list it. So it's very painful on that. Again, if you're down more than 7%, consider selling it and wait for a more auspicious time to enter the stock. Let's look at Qualcomm, QCOM. And this is Qualcomm. Qualcomm, of course, being one of the biggest chip manufacturers for the Apple iPhone, amongst other things, based in San Diego. Very, very good company. It's interesting. This is in the number one group. This is the electronic semiconductor fabless. So we're definitely in the right group. There was a buy point on this one at 167.58. We are above that. But let's look at the technicals on this to kind of see. Well, it looks like we're definitely above that 200-day line. That's good that we're above that. We're above the 50-day line. That's good as well. We are below the 21-day and below the 10-day. So what does that tell us? Well, it tells us that we're going sideways, basically, and we have tested below that 21-day line. Now, if I had a lot of conviction in this issue, which I sort of do, I would consider buying this as it reverses. I want to look at the checklist to see if I'm right. Yeah, this is definitely strong enough to buy in a reversal. The checklist here is 89%. So that's very good. The only thing that's failing on is the sales last quarter. So let's go over here to the fundamental analysis and see. It kind of didn't have as much sales increase last quarter. It's been very strong, though. Look at this. Up 73%, 62%, 52%, 65%, and 12%. I would kill to have sales numbers like that. But, I tell you, and it's an absolute meritocracy when it comes to the stock market. Only the strong survive, and definitely it's very strong, but it didn't quite make it on the last one. But overall, this is a great stock. Look at those profit numbers coming up. Now, what am I doing here? I am looking when I'm looking in this box here, I'm looking at the fundamentals. These are not the technicals. We buy on the technicals and fundamentals. We sell on the technicals only. So we want to have not only a good fundamentals, but we also want to have good technicals. The technicals on this are so-so. They're not great. It would be better if it was coming right out of a base pattern. This is currently extended a little bit above that pivot. So let's look at that pivot. Let's look at that pivot. We are 7% away from the pivot. We're above 7% above the pivot. Typically, when you're buying a stock, the best place to buy it is within 5% of the pivot. So 5, 4, 3, 2, 1. That we're just a little bit extended here. So if we get a reversal here, you could buy it, but you must. You are going to be buying it a little bit extended. And in this market, normally if we were in a market that we were, basically a year ago, I would say go ahead and buy this immediately. But this is not as strong a market. We're not in a market correction, but we're not in an uptrend either. We're kind of going sideways. So we have to be much more careful on our buys. We have to be technically better on our entry. So I probably would not buy this one. Not because it's not a good stock. It is. It's just that it's just a tough time to buy anything right now, at least until we get some more direction, at least until we get a decision if the market is going to be in a continued uptrend or it's going to be pulling back for a correction. So right now it's not in either of those camps. So you just got to be super careful when you're buying, and you got to be very, very careful on your entries. Let's look at Robinhood. I don't think the market has been kind to Robinhood, nor has it been kind to Apple. Let's look at Robinhood. Yeah, the Robinhood chart is terrible. This is not a chart you want to be in. As you can see, let's look at the weekly, because that's really going to tell the tale. So on the weekly chart, you can see it's just a straight, it's a swan dive. It's just going down, down, down. There's a lot of excitement in it. It was at 80. It's now at 15 and going lower. It's got a relative strength of 3. The sales are looking good. This is on the fundamental analysis, but they are losing money. So right now, because of the potential of higher interest rates, with the Fed setting higher interest rates, the market is punishing growth stocks. This is a growth stock. So I just think you got to avoid, I think you have to avoid Robinhood right now. It may be good, it may be good another come around, but just avoid it. Avoid Hood right now. And if you're down, again, if you're down more than 7% in the stock, consider selling. But avoid Hood right now. Just avoid the stock. I don't think it's really doing all that well, unfortunately. Sorry to say. Let's take a quick from is Vax Vxx a good buy right now? Well, this is from Aaron123 ABC. ABC 123. Remember that from the Jackson 5? You probably do. Okay, let's look at VXX. This is an index ETF, very similar to This is the VIX. This is a horrible stock right now. It's not a good time to buy it. It might be. But right now, again, this is just a tough market trade. This is not a good stock. Look at this chart, solidly down. You just want to avoid this one. Yeah, you just want to avoid. You just want to avoid VXX. So that's just that's just the long and the short of it. So you want to avoid this one, and I just wouldn't be in this one. Not looking good. The chart's not good on VXX. All right. Let's see. This is a question on any opinion on EOG. This is an oil and gas. EOG. It's EOG Resources, actually. There you go. EOG Resources. This one's good, by the way, Brian. Thank you for bringing this up. The two sectors that seem to be doing the best in the market right today are the oils and the financials, and this is definitely in there. This is the blue dot special. Remember the blue light special at Kmart? You probably don't remember that, but anyways, blue dot special. That's looking good. Looks like a nice move on this one. It definitely is in. It's just outside of the buy range on this cup with handle base. 91.64 is the buy point. So let's look at that. See how far above that buy point we are. First of all, let's look and see how far above the buy point we are. So let's go here to the pattern rec, and we're 7% above the buy point. So we're 2% extended. We're 2% extended from that buy point. So that's a little bit more than I would like, but because of the way the pattern recognition is not the end all be all, but because of the way it's looking, there's a higher high at 98.20. We're at 98.01. So I think this is buyable right now. This is a good stock. Let's look at the checklist on this one for Brian. Yeah, 89 is excellent. The only thing that this is missing on is the accumulation rating. That means that the funds, for whatever reason, are not particularly buying this particular stock. It's not being accumulated as hard as it should be, but this looks like a very, very good chart to me. So Brian, here's what I would say on this. I absolutely think this is buyable right now, and I think you could definitely move in with a full position. So buyable right now. And I do think you could buy a full position. BLE. I got to spell things right. There we go. So yeah, this one definitely is. And not avoid. It's buyable. Yeah, there we go. Yeah, it's buyable. This one's avoidable. This one is buyable right now. EOG symbol EOG. EOG Resources. So very, very good. Thanks, Brian, for that. EOG Resources. Definitely buyable right now. It's one of the few that is buyable. So Okay, and this is from yeah, I agree with you. Here's the thing, and here's the thing about Bitcoin. Bitcoin is very frightening to many central banks. Okay, and so there's a concerted effort to try to keep people out of Bitcoin. Now, it's political because they obviously don't want Bitcoin to start becoming sort of a store of value or a reserve currency. We know that that's the situation in China. That's the situation in Turkey, and it's increasingly, I think, becoming the policy of the Fed. So they are definitely trying to put the hurt on Bitcoin. They may be buying Bitcoin, I don't know, or they may be selling Bitcoin to push it down. Who knows? But let's look at the GBTC. This is a ETF that controls 4% of the world's Bitcoin, and it's sort of a proxy. I look at it for a proxy for potential, for Bitcoin moving forward. So what I'm going to do is I'm going to take some of my annotations off of this chart here, and we're just going to kind of look at it. So this is the reversal line that I have drawn here on Bitcoin. We are below that 200-day line. Now, this is GBTC, but I use it as a proxy for Bitcoin. So let's kind of look at the technicals here. The technicals right now do not look good. It's under the 200-day line, 50-day line, 21-day line, and 10 line. So it is below all of those issues. So it needs to get some support. I do believe we may come down as low as 24 on. We may come down as low as 24 on the GBTC. If we did, that would correspond to approximately $32,000 to $1 Bitcoin. So that would be approximately that number. So right now, I think we got to wait. We may have an opportunity to buy Bitcoin. If Bitcoin falls below 30,000, we may have an opportunity to buy it. But right now, we can't do anything, unfortunately, with Bitcoin, just because it is just being manipulated. And I think you're definitely right on that. And we talked a little about EOG. I definitely like it. It's viable right now. EOG is viable. All right, let's take a look at Netflix, NFLX, and see what's going on with Netflix. Netflix is fallen below its support level. What I did is I drew a. I'm going to reactivate this. Yeah, I'm going to reactivate this. Oops, can we get it there? Sometimes I have trouble with this. Yeah, reactivate. There we go. So this is falling below this lower low here. I'm hoping that we're going to get some support, but I have a feeling that the support is probably going to come at the bottom of this consolidation right here. So I think we may be getting support, but it's going to be probably lower than $500. This may be a potentially. It's not really a short, but but it's probably going to go lower. It definitely has a hat here. This is the left shoulder, which always should be higher, by the way, than the right shoulder. And we definitely have a right shoulder here. So this is starting to set up as a shorting. This is starting to set up as a short pattern. If this rallies to the 21-day line, which is at 600, then we might see a potential short on this one. So I'm going to put Inflex, NFLX, as potential short. Okay. And let's kind of look at the technicals on this one. Yeah, we're down on all the technicals. Let's look at the checklist. Checklist is 55, which is pretty strong, so I probably wouldn't want to short it. And let's look at the pattern rec. We're 9% below the pivot in 89 days. So we're still not low enough right here to short it. So here's the thing. I just wouldn't touch this one right now, but potentially this could be a short in the near future. Thank you very much, Kartik. I appreciate that's a good question. This one, Netflix is a potential short, but not now. Let's look at CMG. And there we go. Chipotle. And Chipotle has been such a performer for many, many years. Very interesting company. They've never split their stock. Notice it's $15.99 after hours. It's falling below the 200-day line. I would be really careful about this one. If you're looking for a restaurant stock that's had an incredible run, the stock to look at is Domino's Pizza, DPZ. It has one of the best charts. This is actually one of the best charts. If you go back, if you go back to about 2008, this has had one of the strongest charts. Now it's even having trouble now. As you can see, it went up to this 548 buy point, and it was rejected and it's pulled back. So it may get some support here. But, all the restaurant stocks seem to be having a little bit of difficulty. This is not as good an area as it was. The retail restaurant area is only 111 out of 197 in terms of its ranking. By the way, let's look at some of the groups, see what groups are doing best in, a kind of our list of industry groups. So what I'm going to do here is this is the list of all of the industry groups. I'm going to sort it from best to worst. Right now, the best group in the stock market for pricing is the electronic semiconductor fabless. Next is media periodicals, and third is automobile manufacturers. But automobile manufacturers is almost entirely Tesla. Oil and gas, there's quite a few companies here. These are the Canadian the Canadian oil, but it tends to be relatively small. So I'm looking at an area that we might want to look at for potential where we can see some strength coming into it. The transportation truck area has been a good area. I don't think it's been as good as it has been lately. It's pulled down. So it's just a tough market to trade in general right now. It's just a very tough market to trade. I wouldn't buy either Netflix nor Chipotle. I just wouldn't. Unfortunately, it's just not an easy market to trade. Question on NEO, and we get I think I get a question every day on NEO. I understand it's kind of like, this is sort of like buying last year's merchandise. This company, unfortunately, is not the winner in the space. So let's take a look at it. They do have good production in China, but everything that I'm looking at this stock is saying don't buy it. It's below the 200-day line, it's below the 40-day line, and it's below the 10-day line. So let's look at the technicals on it. On the technical axis, this is not doing well. This is 24% below the 200-day moving average. It is 18% below the 50-day moving average, 7% below the 21-day moving average, and almost 4% below the 10-day moving average. So this is definitely a stock in decline. It does have a checklist of 67. It still has a checklist that good, but it may not be for long. So I just think you've got to avoid this one right now. It's just not good. Now, if you're in the stock, and I suspect that's why I'm getting quite a few questions. You're holding on to a stock that's too long. The thing about the stock market is when they start moving against you, you just don't want to hold them. You want to get rid of them and find something else better. So if you're down more than 7% on this stock, NEO, consider selling it because it doesn't look like it's going to get better. And I just don't think it's going to get better. So if you're down more than 7% on it, just consider it not to do it. Question from Polly. This is a good one. Should we short Lucid? That might not be a bad idea. Lucid hasn't really produced a car as far as I know, and it's and the market window is closing on them very, very quickly as Tesla is starting to eat everybody's lunch. By the way, we're going to find out Tesla is controlling 75% of the United States EV market, and it's looking like it's going to get even stronger. Even though their stock is down a little bit, it looks as if Tesla is going to start taking even more market share away from Volkswagen. Basically, General Motors, they say that they're in the EV business, but they're really not. The Bolt, which was their only entry into EVs in the U.S., is out of production because they have problems with their batteries. The only real competitor right now in the U.S. market for EVs is Ford, and they are making the Mach-E, but every Mach-E that they make loses money. So When the Giga plant in Austin comes online, um, Tesla will be able to flood the market with Model 3s, and it will push a lot of people out of the market. So it's a very interesting situation. I know SoFi is not in an uptrend, but it seems to bottom around 1370 range. Should I buy it? Let's look at SoFi. That's a good question. SOFI. And let's take a look at let's look at it. It's true. There is some support at 1366 right here. That's what you're talking about. And it does look like it does get some support there. 1356, 1366. So right around there, 1314. That seems to be right. So there seems to be support there. I agree with you. I totally agree with you on. I totally agree with you on this. There seems to be some support at that level. The question is it enough to bounce? I just wouldn't take the risk in this market. I wouldn't take a risk with SoFi in this market. I just think there's better merchandise right now. Right now, because the money is getting scared, we are seeing a situation where companies that don't have profits, and SoFi does not have a profit, are absolutely getting punished. So I would stay out of this one. I think that there's some better merchandise out there right now. So I wouldn't be there. All right, let's take a look. Let's see if we see a pullback on Key. Let's look at Key, Key. Key Corp, and of course this is based in Cleveland, Ohio, and it's one of the super regional banks, and it's a very good bank. I tried to borrow money there once. I was unsuccessful borrowing, but I've never really done all that well in the financials. They tend to be kind of a dowdy sector of the economy, but this one has pulled. This has a base on base formation and has pulled above the pivot being at 2457. That's right here. It has pulled above that pivot. So the question is it viable? Well, let's take a look at the technicals to see. Well, that's looking good, actually. It's 21% above the 200-day, 12% above the 60-day, 10% above the 21-day, and 9% above the 10-day. Now, the only problem with this stock right now is this stock is extended. So I don't think you can buy this one based on that. I just think that you don't want to buy a stock extended. It's a good stock, but Key currently is extended, not a buy. So I would just warn you. I would just warn you on this. It's extended. It's not a buy. So you can't. You can't. It's not a good. It's not something good to buy right now. It's this stock is extended, Key Corp. So it does present a problem. So I would not buy this one. I'd probably watch list it, but I wouldn't buy it. It is extended, so you want to be very, very careful. Hey, Hans, thanks again. Let's look at Shopify. This is a great stock, by the way. I wish I'd gotten into it, about a year or two ago. I didn't. It's seeing a little weakness now, as a lot of the internet stocks are, but it's still a great company. And it's not viable right now because it is below that 200-day line, and it has seen a sell-off as of late. Relative strength is only 25. So let's look at the technicals on this one. Yeah, unfortunately, we just can't buy this one. It's 17% below the 200-day line. It's 21% above the below the 10-day line, the 50-day line. So right now, the sell-off in this stock is accelerating. Oh gosh, it's accelerated. So we can't, unfortunately, buy it right now. It's just not good. The checklist, 56%, not good enough. And the relative strength is lower than 80%. So unfortunately, great company, great idea, not a buy right now. So yeah, I just have to be, Shop is not a buy. So shop is not a buy. right now. It's technically you don't. Oops, that's key. Technically, you just don't want to buy it. Shop is not a buy right now. So shop is not a buy. You don't want to buy shop. Not looking good. Probably the last two questions here. Let's see if I can get them in really quick and then give you a little bit of stuff. Let's look at AMD. That's a good one to look at because that is a leader in the leading group. The leading group right now is electronic semiconductor fabless, and AMD, of course, is in there with NVIDIA. Those are the two leading stocks in that group. Unfortunately, and let's put AMD in there, AMD. AMD has lost a little bit of support here. AMD is a tough stock to trade. What I'm going to do is I'm going to reactivate my my reversal line. This is my reversal line, and we are clearly below that reversal line. So right now, I would not be a buyer of AMD right now. We're below the reversal line. Not only that, we're below the 50-day line. So let's look at the technicals. We are above the 200-day line. That is good. That's this black line here. So that is indeed good. But we're below the 50-day line, we're below the 21-day line, and we're below the 10-day line. So we just can't buy this right now. We've got to wait for it to turn around. It may pull as low. This may have been a round trip. This may pull back to its pivot. The pivot is at 114. So this one may pull back to its pivot. Right now, I just don't think we can do anything with it, unfortunately. I think right now we just have to say, and this is painful because I like this stock a lot, but this is not a good entry. So AMD is a watch list for now. And what I say for now, because it could turn higher, and if it does turn above this reversal line, we could possibly buy it there. But it has to move and hold. It has to move up to at least 150 and hold it, and it's not there yet. It's 20 points off of that. So we've got to be careful here. So I would not be a buyer of AMD right now on AMD. Well, thank you, everybody. I'm almost out of time here. We at Dallas Trading Floor, we have a great service. We have a great Discord room, and we analyze a lot of stocks in there. And I try to. We have a good community of people that help everybody else with trades. You can find out more about this by going to www.Dallas Trading Floor and just clicking on the link that talks about Discord and Discord group. And we also have a lot of nice options trades in there as well. They're exclusive to the people that are in the Discord room. So I will be back on Monday. I hope everyone's going to have a happy, good weekend. Don't get too cold. It's going to probably snow or rain here, which I don't like. But that's the way of the world. I'm going to try to keep warm at home, and hopefully, and I will be back here on Monday at 4:00 again. Everybody, happy trading. Do check out www.Dallas Trading Floor. We do have some nice free spread trades up there, and we do have the watch list, the curated watch list, and that is free as well. But you got to go to www.Dallas Trading Floor. So until Monday at 4:00, happy trading.